It's our new show, Lex Appeal TV. Today, we're cutting up with real financial pros, Jim Bianco, Jim Iuorio, and Bobby Iaccino. God dang it. We're doing it after the bell. Oh, and
you did that on purpose.
It just stops, just like that.
Listen, if I gave a crap about that, I'd be a really angry person. I mean, I am an angry person, but not about that.
Yeah.
That is spectacular.
Thanks for coming on, everybody. And I forgot to introduce Molly, the lovely part of the host show.
Hello.
Hi, Molly. How are you? Sorry about that. Thanks for coming on, guys. So this is going to be a deal about Jim, and Bobby, meaning we're going to just put a couple quarters in your backs and we're going to get you talking, okay? Because you guys have a lot to say. So Molly and I will riff back and forth, and then we'll probably cut it after when Bobby has to leave for the day or something like that. Right, Bob?
Yeah, it works for me.
Okay. All right. Let's get going. Let's do intros first. I'll start with bottom right, Mr. Bianco. Will you go first? And just so I know everyone knows everybody, but let's just do it anyway. What the heck?
Jim Bianco, president and founder of Bianco Research, and also the president of Bianco Advisors, which runs the Bianco Fixed Income Total Return Fund with an ETF, WTBN, that tracks it. I'm located in Chicago.
Thank you. Bob, you want to go next?
Sure. Bobby Iaccino.
Encino man.
Bobby Iaccino. I'm a co-founder of Pat Trading Partners, also founder of Kingston Financial Market Research. I am the co-host of The Trader's Edge with the guy on the upper right, Jimmy Iuorio.
Jimmy Iuorio, but Jimmy Iuorio.
It's Iuorio in America. If we were in Italy, which we are not, then we would say you guys are pronouncing it correctly, Iuorio. But I'm Jim Iuorio. I am from TJM Institutional Services, co-host of The Trader's Edge, and co-contributor to the Unfiltered Investor newsletter. And thank you for having me on.
You are welcome. And I'm Lex, and that's Molly. Incidentally, Jim, you are a very close neighbor. Would you agree?
I by the crow flies, I bet we're about 500 yards away from each other.
So I can't hit a driver that far, but you
get the good bounce and you hit the pavement.
Yeah, couple drivers. All right, we're close. Okay, let's get going. Mal, I'll ask the first question. I want to get these guys talking, and me not talking. So let's talk FOMC. Isn't it next week, August 1st, I believe?
No, this week.
It's tomorrow. Starts tomorrow and then goes to Wednesday.
We're at the end of July. I forgot. I'm a week off. Holy cow. My bad. So it's at the end of this week, right? So what thoughts, guys? Who wants to tee this baby up?
You should probably have me or Jimmy go first, because otherwise Bianco makes us look too stupid.
Yeah, right. I'll do that too. So I can't draw a comparison to Bianco. By the way, he's one of the only guys who, like, I feel I'm intimidated by intellectually. So I hate you for that, Bianco. Here's what I think about the FOMC. I think that Jay Powell is not an idiot. If it was the three of us, Bianco, myself, and Bobby running the Fed, and the day before came at the meeting, and we saw that for some reason, even if we wanted to ease, that the market was pricing in 97% chance of us not easing, I would say to them and they to me, yeah, I guess we didn't forecast. We weren't as transparent enough. We cannot ease for fear of disrupting the market. That being said, the Fed has radically slowed down, draining its balance sheet only to $5 billion a month. It's kind of flatlining. To me, if the market wasn't fully expecting that, that's a little bit of a distant third cousin to an ease. So I think they're flipping into dovish mode, and I do think they'll ease in September because he feels it's above the neutral rate. How do you like it?
I like that. I'll say this. I think Jerome Powell has an excuse, but not a reason not to cut rates. Let me reverse that. A reason, but not an excuse. The reason would be we still have about, what is it, Bianco? I think 2.7 core PCE last time it came out, somewhere around there. It's no higher than 2.4, but it's above 2%. We had the unemployment rate, which I know Bianco has been talking about a lot on social media, being 4.1%, having a little bit to do with the population shrinkage and the labor force participation rate falling more than anything. But I think, this last rumor where Trump was going to fire Powell that ended up being BS, I took that as the market believes Trump's going to get his rate cut one way or the other. And I think Powell is being political. I hate saying that because I don't know him personally. but he seems to me to be being political. If he says that he's not cutting rates because tariffs could cause inflation, then he's not being data dependent. He's being forecast dependent.
Mm-hmm.
And I'm stealing that from Mike Singleton, but they should, in my opinion, at least consider it for this meeting. They're not going to, obviously. And I agree with Iuorio that in September.
Okay. Mr. Bianco, Jim.
Yeah, I'll add into that they're not going to cut rates at this meeting. And I'll just diverge, riffing off of what you guys said. Two things. I think the most important thing to look at when the FOMC comes out on Wednesday is the dissents. How many do we get?
Mm-hmm.
Now, Chris Waller is kind of boxed himself into, he's a governor, just so everybody knows, there's 7 governors, and then there's 5 district presidents that rotate among the 12 that vote. There's only been a handful, like 3 governors that have dissented in the last 30 years. Chris Waller actually being one of them, but it was on a non-monetary policy thing. It was about
Honig
QT.
being the famous one.
Right. And so he's probably going to dissent on Wednesday. A couple hours ago, when President Trump was in Scotland and he was asked about the Fed, he thinks that they should cut rates this week, is what he said. Now, they're not going to do that. Waller's going to dissent. If Waller doesn't dissent, I think he basically removes himself from any consideration of being Powell's successor. Next question is, does Michelle Bowman, who's another Fed governor, another Trump appointee, does she dissent? Do any of the presidents dissent? That's what we're going to start to see. And that's what really is going to be important, I think, out of this meeting, because they're not going to cut rates out of this meeting. We'll have to see. Finally, Bobby, I'll push back a little bit. I think that if he doesn't cut rates after what Trump said today, I think that Trump does entertain the idea of firing him between say Thursday, the day after the meeting, and September. I don't know if he does do it, but I think that the probability is, it's maybe not 50%, but it's not that much below it right now, that he might still try and fire Powell. So I think that is still an open issue.
Does that make us look like a banana republic? And are you describing a mutiny on the Fed?
No, I'm actually not describing a mutiny on the Fed. I'm actually describing the way it should work. It doesn't work that way. When you are a Fed governor, you are appointed by the president and you are confirmed by the Senate to represent the American public, not to represent the Federal Reserve Chairman.
Mm-hmm.
And you should be voting independent of what the Federal Reserve Chairman does to make sure that it's a policy that you believe in. I think it's been one of the biggest mistakes that the Fed has had since Volcker started this in '86, that everybody has to agree with the Fed chairman. Oh, yeah, you get to go in his office and you get to argue passionately your argument behind closed doors. And he'll put on his serious face and pretend like he cares what you say. Of course, I'm being sarcastic here. But I do think that this should be more like the Supreme Court. Does any president ever say, I don't like the way the Supreme Court's voting, so I want to remove Chief Justice, remove the Chief Justice? No. Chief Justice Roberts. No, they never say that, because they know he's only one of 9 votes. If the Fed chairman was only one of 12 votes, none of this would be happening. It's happening now because the Federal Reserve Chairman decides what policy is. And that's a mistake. And if anything good comes out of this process of getting them back to all voting independently, and look, you can fire the chairman, but it doesn't mean you're going to get what you want because there's 11 other voters on it. Mm-hmm. That would be a good thing in the long run.
I just want to throw back real quick, and maybe I'll go to Molly and Lex on this too. I want to know what all you guys think. I think the first time in a Trump presidency, because of course this is the second one, there's somebody he's listening to, and I think it's Bessent. So I think Bessent is against him doing that. I really do. Now, I don't know that for a fact. He has made some public statements about how there seems to be no reason since he's gone in May anyway. And also, I think if he fires him, he takes away the scapegoat for any slowdown that he doesn't want to accept as being the fault of the deflationary effects of the tariffs or anything else. So that's why I don't think he'll do it. Now, I'm going to end up, I freaking hate disagreeing with Bianco on anything.
Well, let Bobby, real quick, let me just say one thing.
Go.
If he does fire him, what will probably happen was Trump will fire him. Powell will say, I'm not going to leave. Let's go to court and argue it. And that's basically what the process would be.
So how does that play out then, guys? If Trump says you're fired, Paul just says, okay, good, I'll see you in court. That's it. He's not really fired.
I think so. He's not going to leave office, right?
Right. I mean, basically, the Federal Reserve Act says that you can fire the Federal Reserve chairman for cause. There are two legal terms. There's at will, which means you work at the pleasure of the president, and he can fire you for any reason or no reason. For cause means that you've done something illegal, dereliction of duty, or something along those lines to give a cause for your removal. Now, the problem with that is no Federal Reserve chairman has ever been fired for cause, so nobody knows what for cause means. We've kind of agreed it doesn't mean you didn't cut rates enough.
Right.
You can't use that excuse. So the excuse he seems to be using is this building and the way that they've been managing the renovation of the building. And I've also argued, getting into my personal life, I have family members that are in the construction business. My name ends in a vowel, and they're in the construction business. And they do government projects. And what I've learned from them is every government construction project ever done, currently being done, and ever will do is over budget and full of fraud and abuse. And if you want to look hard enough at any project that is being done, you could make who's ever making the decisions on that project to look really bad. And that's why this thing has got a lot of danger for Powell. It's a $3 billion project. I'm sure they're going to find something that could be very embarrassing for them if they want to. So that's probably the avenue that they're going to go down if they have to try and fire them.
And, I will say that not asking dumb questions is my superhero power. So I will ask, it's a private entity. So it's a private enterprise. It's not a public utility. So I'm going to agree with Bodie, who's commenting here. Can he be fired? I mean, it's so ambiguous. Maybe this lawsuit is a little bit opportune that's happening where the FOMC, they're asking him to be more transparent, which has never been done, in a public view. That would just be the kiss of death for them, because you would see them all not dissenting and all agreeing. And with that said, there was a big move with the BIS. So how big of a part do they play in monetary policy, with the Basel III endgame just passing July 1st, which we didn't hear about? Nothing mentioned about that, but that's going to require a lot of capital to be acquired by a lot of these banks to make them less in danger of what we saw in 2008. And that's a 3-year rollout. But what do you see with those two things combining?
Jim, I'll take the first 30 seconds to the first part, and then you go deeper on the second part, which is better. Because the notion that the Fed is independent has always been laughable to me. They are appointed by the government. They serve at the pleasure of government. Their reappointments depend on the government. That's a bullshit thing, like saying Fannie and Freddie were both government agencies and not actual government, despite the fact that they have government funds. So that whole thing is a complete bullshit thing. But Jim Bianco for the second part.
Yeah, let me just riff on that last part. It's in the Federal Reserve Act that the President of the United States can fire the Federal Reserve Chairman for cause. We just don't know what for cause means. So that's what they would be arguing, is not that he doesn't have the ability to do it. It's just that your reason's not a for cause reason. That's what they would be arguing in court. And that's where the whole building thing comes in. As far as the BIS with the Basel III rules, you're right. It's a 3-year rollout. It's probably only going to impact 3 or 4 banks in the United States, basically JP Morgan, Citi, Wells, B of A. That's about it. Once you get down the US Bank or Truist or some of the other ones on the list, it's going to impact them less and less. It's bigger deal for a lot of the mega banks in Europe and a lot of the mega banks in Canada, but they've got a 3-year rollout. So I don't think it's going to have an immediate impact on what the Fed decides on monetary policy for the next year to 18 months. Arguably, after that, you could argue into 27 and 28. As it gets closer to its effective date, it might have an impact, but not right away.
And are you worried? You mentioned JP Morgan on that. Their off-balance sheet exposures over 3 trillion. Is that a worry that we should think about? We saw some of that happen before, you know, when Lehman was collapsing back then. Is that something to look at, or
worry about what? I mean, the reason I
are
say
they
that
over leveraged? Do you think they're over leveraged?
They could be, and there could be a worry there. You know, of course, they do have a fortress balance sheet, so they say they have a fortress balance sheet. And I mean, are we worried that in the next financial crisis they're going to get bailed out? Of course, they're going to get bailed out.
Of course they are. They've already been told that, right?
Yeah.
Right. So are we worried that they're going to be such a big mess that the U.S. federal government and the Federal Reserve can't bail them out? Probably not. So, I mean, I would worry about it in a financial crisis if I was a stockholder of those companies, but maybe not for the broader financial system in general, because they'll get bailed out. Especially that bank will get bailed out. But I don't know if it'll actually be a problem. They didn't have that problem during the financial crisis. They didn't have that problem during COVID. So it'd have to be something worse than that in order to get them into that kind of position.
Okay. So if we have, you know, possibly lower rates, and you're hawkish, correct? With rates. Okay. So if we do somehow have lower rates and Trump pressures them, so because I know we're renegotiating that 7 trillion in bonds coming up here, and we do have bailouts, how does that affect the end guy? You know, what's your plan on that? Does crypto play a part in all these new rules? What do you see for the little guy, you know, bracing themselves for all of this and their savings? If you're not Lex, who knows how to spin a trade left, right, and center.
So for the little guy, let's put it this way. What happens when they cut rates? Oh, well, mortgage rates go down and bond yields go down. Well, let's look last year. They cut rates 4 times last year, twice in the same meeting, 50 basis point cut in September of last year and November and December. So when Trump keeps screaming, by the way, just as an aside, that the ECB's cut 10 times and our Fed hasn't moved. Well, actually, they did. They cut rates 4 times last year. And what happened when they cut rates those 4 times? 10-year yields went up. They went up 120 basis points.
Yep.
Now, I've argued, why did that happen? And that is that when the Fed does policy that the market thinks is appropriate and agrees with, it follows with rates. So if you're cutting rates and the market says, yes, inflation and the economy's slowing, we agree, rates go down. If you're cutting rates and the market says, wait a minute, we don't think that's necessary, you're just going to overstimulate the economy and you're going to produce something that is probably not good, then rates go up. And I'll give you another example. Trump keeps talking about they've cut rates in Europe 10 times, and they have over the last 2 years. The German and the French and the Italian yields are 10-year yields are higher today than they were than the day of the first rate cut. Their rates have gone up too. That is an indication, now not by much, maybe about 15 basis points, or maybe you could better say they didn't go down at all. There was no relief on interest rates with those 10 cuts for the long guy, because that's what you want to care about if you're a little guy. You care about your mortgage, you care about your car interest loans, you know, you care about your business loans if you have a business that needs lending. Those rates are not going down. That's what happens if they cut. What happens if they cut rates in September? Does the market think it's the right policy? If it does, then mortgage rates come down. If the market thinks it's the wrong policy or political policy, you're stimulating when we don't need it and rates go up. That's the thing we have to be careful of.
But can I add to that real quick too?
Go ahead,
Because there was a time, Jim, this is not really a pushback, but I want to know your opinion on it. I believe it was the moment where the rumor came out that Trump was firing Powell that day or whatever. Short end rates predictably went lower. 10-year yields unpredictably went a little. No, I thought they initially on it, they ticked down a little bit. Am I wrong on this?
For 2 minutes, and then they shot up higher until
they shot higher.
But the point I guess I'm trying to make is this doesn't seem like it's that difficult decision for the Fed. If they're starting to think ease a quarter, if 10-year yields go up, they've gotten the feedback that they needed and could hit the brakes, correct?
Well, they could. I mean, you know, but that would also be a very bad precedent for the Fed. Okay, we cut a quarter, we blew up the bond market. Yeah, happy Trump, we did what you want. I don't think the public is going to be thrilled about that kind of.
I have important breaking news to share with you guys too. Raul Duke tweets, "You would think that Jim Bianco of Bianco Research could afford a baseball cap custom fitted to his enormous head instead of that distracting
Wow.
cap hanging
That's
from
just
the cap."
wrong.
I think he means your smart head, your metaphorical head.
That's just wrong.
It's a Cubs
No.
hat. You are wrong, Raul.
That's an old school hat. That's a great hat, Jim.
I
Don't let
agree.
anyone
It's a
tell you
great hat.
anything else.
I laughed. I'm
but-
sorry.
Raul
I'll
very
take it off when they're
stylish,
not.
that's
I'll
the
take
way.
it off when they're not in first place.
I love it. So do you guys ever watch anything? So it sounds like all you guys are in the same camp here. No change, right?
This
For-
next
for this
meeting.
meeting.
For this next
Yeah.
one. Okay. Do you guys ever watch anything else besides the things you brought up relative to a tell? Do you ever look at the event space, for instance? Do you ever look at VIX? Do they tell a story here for someone who's on that side of the equation relative to what interest rates may do and the effect on the overall market? Is any of that popping on your radars once in a while or no?
Let me say something completely different than what you asked, although it's related. It's related. I think, we talk about replacing the Fed, a lot of us do anyway, with some sort of mechanical, just, if X happens, then Y happens to rates.
An
The
algorithm.
last time the Fed cut, and I don't remember when it was.
September.
Yeah, inflation was 100 basis points higher. The unemployment rate was slightly higher, and GDP was estimated to be slightly lower. And then using the Atlanta Fed GDP. And when I look at it from that perspective, it's not that I think there's a screaming need for a rate cut. It's just, to me, it actually supports the people that say we can't have a mechanical option because there's nuance, right? And part of the nuance might be the US bond feedback loop, right? The 10-year feedback loop that we get.
Mm-hmm.
So I always look at that and I think to myself, okay, if we're using what I would consider to be a semi-reliable mechanical function, it should be the unemployment rate, GDP, where the inflation level is. And I'm talking about using core PCE, not anything else. The Fed has cut in what seems like a hotter environment than this. And I could go into PMI figures, manufacturing PMIs, the regional PMIs are starting to look semi-weak if you combine them all together. So I see this as a reason, when you're talking about a tell, Lex, the tell to me is really the data as to what they should be doing. But the fact of the matter is, it's not my job to talk about what they should be doing. I mean, I'm long stocks. I'm long all kinds of stocks, actually, more than I ever want to be. But I, of course, am the human embodiment of hating the bull market. I always hate the stocks I'm in, always. So I don't know if that answers your question or not. I try to look at it and say the data seems to point to the need for a rate cut. Although I don't have a whole lot of conviction when I say they should cut rates. I don't have a whole lot of conviction in that.
What do you guys think about the Warren Buffett indicator? Guys ever heard of that?
Is that the one earnings yield? No, that's how he values stock.
Market cap to GDP.
Yeah,
Exactly. So
right.
in
Like
.com,
200% or something like that, right?
yeah, exactly. So .com bubble was 140 to 150, global financial crisis, 2008, 100 to 110. Recent levels, it's at 190 to 212, which means you're playing with fire and there's a huge market correction, which is what you're saying, Lex, is like, what are some metrics that are showing, should we be careful? In which case, Lex, what would you do is how would you prepare your portfolio and what kind of moves would you make to just hedge that?
I think I'm like Bob. I'm always long. When I was a trader, a professional trader, I was always short. So from 87, when the stock market crashed, I was short deltas until 2010. How'd I do?
You were good. Did good.
Yeah, I did great. Right, exactly. It's illogical, but it's a different game. So,
right.
This is an investing game, whereas what I did was a trading game. So, we don't know which way the market's going at all. We just buy and sell bids and offers all day long.
Yeah, but they're giving away options. If you're someone who has a difficult time sleeping because your long portfolio is up to your eyeballs, there's ways to hedge that, which I am not fully hedged, but I'm somewhat hedged. Every time we've had big up days, I've done it. You asked before what tells, and I'm going to bounce this to Bianco because one of them is a direct thieving from him. So I have M2 money supply growth, which I know is somewhat obfuscated by tariff related inventory shit like that. I have the Fed's balance sheet up, and I have credit spreads up. And I look at those things for tells as to things that are changing quickly, not M2 money supply as much. Now, another thing that's happening this week that I'm going to bounce to Bianco because I stole this 100% from him is the refunding announcement, which I think is going to be interesting because I don't know if they want to sell their $9 trillion of debt at any duration outside of 5 years. Jim?
Yeah, I agree. I mean, to start off with the bigger question, I think there's a lot of market indicators. You mentioned credit spreads. I'll throw in the VIX. I'll throw in the MOVE, which is the Merrill Option Volatility Estimate. It's like the VIX of the bond market.
Mm-hmm.
All three of these are low. All three of these are suggesting that if the market looks at a 2% chance the Fed's going to cut rates in July, and about a 55% chance they're going to cut rates in September, call it a coin toss. Mm-hmm. It's cool with that. It's cool with that right now. It's not pining for any kind of a rate cut. Now, to your larger point about the refunding announcement, we got the first half of the refunding announcement about an hour ago. The Treasury says that they need to raise $1.01 trillion of new money this quarter. A little bit more than was expected, but not a lot more than was expected. But the bigger announcement, because this comes in two parts, is going to be Wednesday morning. How are you going to raise that $1.01 trillion of new money? What mix of bills, notes, bonds, tips, Treasury inflation protected securities are you going to issue to get to that level? Now, a month ago, President Trump was on an interview with Maria Bartiromo and said that he doesn't think they should be issuing any more 10-year notes or long bonds, and that you should only issue bills. And then we'll get rid of Powell. We'll get my guy in there. He'll cut rates to 1%. And then we can refinance all of that down at 1% and save hundreds of billions of dollars on interest costs, is what he said. If that were to happen, I think it could create a financial crisis. And the reason is that these markets are roughly in balance. The amount of bills you issue, if you want to go 1 or 2% higher, 1 or 2% lower, if that's fine. The amount of bills, notes, bonds that you're issuing is largely in balance with the amount of buyers that you have. But if you're going to announce Wednesday morning, okay, now we want to issue $3 trillion more of bills just now, and we'll do away with the 10-year note, you throw the whole market out of balance. And I still come back to the old line, there are no bad bonds, there's only bad prices. Mm-hmm. And how do you fix the market being out of balance? You take yields higher until you find $3 trillion worth of Treasury bill buyers. And for you crypto guys going, I'd never buy Treasury bills, don't say that because the infinity is a number. If we could take yields to wherever we need them to go, to even drag the crypto guy buys in. Because remember that the bond market will always get funded. It is the destroyer of worlds. If it has to, it will destroy everything else and suck all the money into it. It's a black hole in order to get funded. But we don't want it to be that way. And throwing that market out of balance could do that. Now, Trump has said it. He's repeatedly said it. Bessent knows, I would argue, he knows what I just said. No, we can't do that. It would be a disaster if we did that. So hopefully this will just go down as Trump says a lot of things. And, we'll get some kind of minor tweak at the margin and the market won't be at any kind of a mess. But that's coming Wednesday morning. And then Wednesday afternoon is going to be the Fed announcement. So it's going to be, and we're going to get GDP on Wednesday too. So it's going to be an interesting day.
And Apple and Amazon.
And but that's at the close when we're exhausted already.
Yeah. That's right. All right, let's change a little bit. Ready for a little shifteroo? Let's go to the tariffs. I was playing golf over the weekend, and someone brought it up who's not in the markets at all, and asked about the tariffs. So this person's comment was, is it political theater on Trump's behalf? Does he really mean this stuff? 200% tariffs, 100%, whatever he's talking about. What's your feelings on this one? Is he just trying to negotiate, or is it something else? Or anything in between?
Bianco first, because then I'm just going to say whatever he says. I don't know. I have an opinion.
Trump has been tariff man for decades. He has been thinking this for a long, long time. And he put all those tariffs on. The markets got a little bit yippy. He backed off the tariffs. And then we ran to new all-time highs. And yesterday we got the EU agreement where I'll use some technical language here. I guess Trump pantsed the EU in the way that he put that deal together, that all of their products coming to us gets a 15% tariff, but all our products going to them gets a 0 tariff right now.
Mm-hmm.
He's serious about tariffs, and he's looking at the all-time high in the stock market, and he's thinking to himself, man, I should have done 30%. I shouldn't have done 15. Market loves this stuff. So I think he's dead serious about tariffs, and he's talking about a tariff rebate to people because he's going to bring in so much money. He's talked about eliminating the IRS, the Internal Revenue Service, going to the External Revenue Service. I understand out of the deal, you're supposed to say like you mean it, but I think he really means it, that he thinks the tariffs are a legitimate tool and intends to continue to go with it.
But it sounds like you don't, Jim, even at a relatively low level, after people were tariffing us for 30 years, you're saying it's a disastrous policy, or you're saying it can be fine if worked correctly?
No, I'm a free trader. I would prefer that.
What if these countries aren't allowing us to free trade with them?
Well, then that's a different story. But I would, if you want to use it if he wanted to use it as a carrot, I'm going to tariff the hell out of you unless we all go to 0. I think that would be the better way to go about doing it. But 0 tariffs, that is both ways.
Yeah.
But instead, he's using tariffs in a different direction altogether. So he's doing it the way he's going to do it. I don't agree with it, but that's kind of the way it is. I understand it. I completely understand it, because I will throw out one thing on the other side of the equation. Mm-hmm. In 2000, China was invited into the WTO. Now, what was happening during that period, in the late 90s, early 2000s, was technology through the internet and stuff like that was coming, and manufacturing and a lot of those kind of industries were being disrupted by technology. You could argue, a lot of those manufacturing jobs that Trump says he wants to save were going to go away anyway. But then what happened was China started dumping. Dumping meaning that they were selling stuff into our market at below production costs in order to grab market share. That accelerated that loss, is what it did. That the natural attrition out of those industries was accelerated. I've been to Rockford, Illinois, or Racine, Wisconsin, and using some places around Chicago, and I've seen what's happened in those towns because of the loss of manufacturing jobs. Yeah. And it's not good. And I understand. So I also understand that when I hear Larry Summers say, I'm happy they dumped it, because that just means I get cheaper stuff. Dump more, give me cheaper stuff. Mm-hmm. And then, okay, I understand that argument. But then when he says everybody wins because of free trade, I was like, you got to go look at Rockford. You got to go look at Racine. You got to explain to those people what happened to their jobs. There was a cost. There was a cost to that. And so if you want to use tariffs to level the playing field, I'm all for it. But he seems to be using tariffs in a protectionist kind of way. I understand why he's doing it. I just not completely on board with that he should be doing it.
I love that.
Yeah, I agree. I agree with that.
I'm
sorry. I agree with that from a standpoint of, it reminds me a little bit. I think everybody on this screen right now is a free trader, right? But it reminds me a little bit of when socialists say no one has actually tried socialism the correct way, right? It's like you've got this whole thing where there's free trade, and then let's say we all go to 0, and then China subsidizes all their businesses, right? And it's like it's almost impossible, in my view, to get free trade in the current world, especially when you've got a player like China, as Bianco just spelled out, right? I mean, they go out and they dump things, and a lot of their stuff is supplemented by their own government anyway, so it doesn't end up being real free trade. So it's funny because it's almost punitive on Europe, right? Where you've got the 0% on our stuff and 15% on theirs. Plus they got to give us $750 billion. It's something an Italian can really appreciate, right? It's like punishment plus big, right? And you really appreciate that particular deal.
But I do want to add something that Jim Bianco said, because he said Trump is using this as just policy going forward. I think there's an element to it of punishing them for past sins. I think what you said about losing manufacturing, and I think what Jim's saying, and to put a finer point on it, we were always going to lose the manufacturing to China, but it should have taken 40 years instead of 15 years. And when you do it with such rapidity, it's disruptive to markets and to social systems and to towns.
You don't give them enough time to adapt. And I think it's interesting. There's a question that I want Jim to answer, because here's what I think after, and maybe I'm just riding a wave of the EU thing, because like you said, they were absolutely pants. And I think that we can be all against tariffs theoretically and in principle, and I certainly am. However, there still could be a time where, if used properly and gently, they could achieve the goals that Trump wants to achieve. And I'd like, the metaphor would be, I hate corporatism. And I hate when governments pick out certain sectors and throw money at them. I think they're just buying companies. That doesn't mean that every once in a while they don't hit a home run by subsidizing a technology that absolutely is the right technology. Bad policy could be a good outcome. Jim?
Yeah, I agree. I mean, there are strategic industries that we should be thinking about that that go on just, in addition to the economics. Shipbuilding is one that's very important. We don't want the Chinese building our aircraft carriers, and we would like it to be a lot cheaper to build our aircraft. You know why the Chinese are so good at shipbuilding? Because in the shipyard, they're building an aircraft carrier, and what are they building right next to it? A cruise ship. And so it makes the production costs of both much cheaper. If we were to subsidize that kind of business, to bring that business back, in order, it would help us on the defense side, in addition to economics. Strategic semiconductors is another one too. We just hope that China doesn't, embargo Taiwan or try and take over Taiwan and give us all kind of trouble when TMSC is shut out of us. So we have to try and figure out strategic kind of stuff. So I think that there's some value in making those kind of arguments. But when it comes to, does apparel need to come back here or something like that? If they want to produce cheap T-shirts, they can produce cheap T-shirts, because I don't think that there's a strategic importance to having the T-shirt industry back in the United States.
Lex, Molly, did I miss something? Do we have a deal with Canada and Mexico yet? Because I have a friend that works in the.
I am actually in Canada, and I will tell you from the looks on their faces, we do not have a deal yet.
And the reason I bring that up, Lex, and
I'm going to go there.
Something else we wanted to talk about is I have a friend who works in manufacturing with a company related to Ford. They're owned by Ford. I guess he wouldn't care. And he was really pissed off about the Japan deal, because he said it's hard enough already competing with them. And he told me about the multiple times that things go, you guys all know this, things go to Mexico, get built, brought back over here, shipped up to Canada to get tweaked, walked back here in order to assemble a car here. And those things, I guess, currently are being tariffed in and out, in and out, in and out. And now we've got a clean deal with Japan. So I'm curious if that bothers anybody.
I haven't thought about it, Bob.
Me neither, Bob. I'll be honest, I haven't either.
I am the smartest one in the room.
I think the main thing.
Counterpoint.
I'm not smart. Molly?
I think Taiwan is, one of the biggest things that we should probably keep our eye on is AI. So we have that big, massive plant being built in Texas to power it all. And I think it's called Stargate. And so Taiwan right now is the main producer of AI chips. And so China has their eye on them. So that's a really big, really important thing to watch, because AI is here. It's not going anywhere. It will, we talk about the future of the Fed and how crypto is going to come into this, but then you have AI, and once that's the software, and once that hardware of quantum computers come on, that cryptography that protects, let's say, Bitcoin becomes really endangered. So those are, most wars are fought after land and resources, but that is probably, talk about the end game, that's probably the end game. So I think it's really important to keep our eye on that and make sure, we make it palatable for them to come build those chips in the US. Tariffs, do I think it's sort of a necessity? I am in Canada and I see the real impacts across the border of what, call them boots on the ground here. I can see what's happening to the people here. But I do know that, China's surplus matches our deficit. And so it does need to be addressed. And I know he's probably modeling it after McKinley, but I think there's purpose to it. I think it does cause, in the shuffle of things, as things get thrown up and reestablished, I do see it as a negotiating power. I'd be curious to see, Trump is has often said that he wants a weaker dollar because you make more. He loves a stronger dollar, but a weaker dollar makes more money. I think he was quoted to say that three days ago. What do you think about that, Jim? And what do you think his next moves are going to be, and how will that affect us?
Oh, he said that 3 days ago. In fact, he went as far to say is, I don't think I'm allowed to say it, but then he went on to describe all the virtues of a weaker dollar. Is basically what he wound up doing. Because a weaker dollar gets him what he wants, right? It makes all of the products that we import cheaper, so then you could slap your tariff on it, and then the final consumer price isn't as high. So does he want a weaker dollar? Yes. He wants to say that the dollar is the most important currency in the world. It's the best, most beautiful currency we've ever seen, but he just wants the level of it lower. And it's going to remain as, he then also said, it's going to remain as the reserve currency. And if the BRICS want to try and put together a competitor to the dollar, he's going to punish them. So he's trying to have both things at the same time. But he definitely does want a weaker dollar. He's not getting it today because he pants the Europeans, and basically the dollar's rallying against the euro for right now.
So Jim, this last huge dollar weakness, my thesis, because I couldn't find the thesis, was just an unwind of the years-long trade of being long the dollar and short everything else. I cannot think of any other reason why the dollar has lost so much of its value. You?
No, I think you're right. And I'll go you one step further. I mean, maybe I'll tweet this out if I already haven't. I can't remember if I did a couple of weeks ago. But if you look at a chart of the dollar, there was a good relationship between the dollar and interest rates until Liberation Day. Then that relationship broke, but then it reestablished in early May at a lower level. So now all of a sudden, I think we're back to kind of the dollar being heavily influenced by interest rates, but we're at a lower level. So yeah, you could say, well, the dollar index is not 108, it's 99 or 100. Yeah, but it's still, now that relationship is reestablished. And I think that's part of that. There was some kind of unwind that left us at a lower level, and now we seem to have reconnected, at least for right now.
I mean, I think that what gives the dollar value is probably scarcity. And as long as bank credits are continuing to, insert currency into our system, which is you need for growth. So it's not something that you want to do away with. But if that scarcity starts to diminish, then you start to question the value of the dollar, because, if you look at just over the last 100 years, over 90% of the value has been lost. So what are alternatives? Do you think Bitcoin is an alternative? I don't see central bank digital coin CBDCs as being, something palatable to the people, because it's just there. It's, if I buy the wrong book on Amazon, they just shut my accounts down. I'm not crazy about that. I'm more of a sovereign human being. So what do you think on where that's headed? And, there's such a bank change. This is such an incredible time of our lives, with Enbridge and Swift systems and XRP happening, and how international money transfers are. Where do you see money in 10 years, and where do you see the dollar?
A couple of things on that. First of all, there will never and should never be a CBDC ever.
Great.
And that is because it is not a financial tool. It is, as you pointed out, it is a surveillance tool.
Yes.
And it is going to be used to look at your activities in your life. Hey, fatty, you can't have a sugary drink this time. So when you go swipe your card to buy it, it will deny it, and stuff like that. And so that's why we will never get one. As a matter of fact, there is one of the bills after the Genius Act, one of the other bills, you got the Clarity Act. And the third one is the permanent banning of a central bank digital currency.
Yay for that.
So there is that. So if we're ever going to look at a stable coin or something like that, it's going to be a private initiative, is what it's going to be. And you're right that we need to do something about the payment system in the country. It's woefully inadequate. I just got an email last week from the dealer that I bought my car from. Mm-hmm. And they said that effective at the end of August, anytime you go take your car in for service, they're going to charge me 3% if I use a credit card to pay for it. And I'll point out that that's basically what the average credit card fee is, 3%. Where'd that number come from? In 1871, when Western Union invented the money telegram, and they had to put physical currency in a saddlebag and ride it to you on a horse, they charged you 3%. And we have, in all of the technology that we've come through with the last 150 years, it's still 3%. That is outrageous that it is that much money. And that's what needs to be disrupted down to zero. Email is free. Doesn't cost me anything to send it.
Where is the cost?
Money transfers should be free. And not only that, they should be basically unlimited. And what I mean by that, I'll throw out an idea at you. I think that our business models for a lot of our businesses are broken because of the money transfer system. I'll give you one example. Amazon. Why do I pay a monthly service? Why do I pay a monthly fee to Amazon? Because that's the only way they could get paid. The way it should be is I look on Amazon for free. I start a movie or a show for free, and the meter goes off, and every minute it takes a third of a cent out of my pocket, or half a cent or 2 cents every minute until I turn it off, and then it stops. That's the model that we should be working on. The banking system is nowhere near handling something like that.
And in fact,
it should have been 60 years ago, not just now. So I agree with you that the banking system is desperately in need of disruption.
And I think the Fed is still coded in cobalt, but you'll hear the CTO of XRP just announced that, how he sees it in the future is that you would pay your mortgage, in real time. So as you're working, money's coming in and your mortgage is getting paid. It should be this instant.
You pay your mortgage every second of the day, as opposed to lump sum once a month. And this would open up a lot of micro payments, would open up a lot of things. If I go to the New York Times, I don't need a subscription. If I want to click on an article, it charges me 5/8 of a penny to look at an article, is what it does. And it just takes the money from me immediately. But you need a secure encrypted system to do something like that. And like I said, we should have had that decades ago, but we don't have it now. And in this new modern digital world, the biggest impediment to us really embracing digital, going the next level, I do think, is the financial payment system, which is a huge profit center for the banks, by the way. Don't kid yourself. It is a giant profit center for the banks, and it needs to be modernized. And if crypto and the Genius Act are going to force that into modernization, great for them. And I really hope they do, because we need it.
Agreed.
I guess, Jim, you don't have a Costco membership, do you?
No, I don't.
That's not expensive. My goodness.
By the way, I'd like to add, I think that we will eventually have central bank digital currency in this country. I think we're angling toward that way. We cannot just assume that we're going to have sensible politicians in charge, which I don't laugh when I say sensible politicians. I think we're angling toward that. I think one of the reasons that Bitcoin and physical gold was trading with such a premium is that people are stockpiling for that. I know I am. And by the way, Molly, what you said about the scarcity of the dollar, hell yeah, but it gets a lot less scarce every year too with the way we grow the monetary supply. And I have they're going to fuck up the stewardship of the currency portfolio. That's Bitcoin, gold, silver, real estate, copper, platinum, palladium, all that shit. And again,
do you have Smith and Wesson in that portfolio?
Smith and Wesson is in there. That's in my Redneck 20 stock index, which is McDonald's, GM, Smith and Wesson. But anyway, cigarettes. I have lots of cigarettes. But anyway, so I think that those things are going to do quite well. And the tell for that in the currency part of it is when the Fed starts buying bonds again, I plan on grabbing more of those positions because I do mistrust the stewardship of the currency.
Yep. I know, Bob, you got to cut out of here in a few minutes here. So let's get to one last topic. And Jim and Bob, we talked about this, I think, last week with State Street. So let's get Jim Bianco's take on gold. So let's chat a little bit about gold.
That was a bad Austin Powers impersonation.
That was bad. I love gold. Wait till you see my new outfit I've got to do. I've got to do a short on that, and I had to go buy something off Amazon with like the $sign and the wrapper stuff. It was crazy, but I did it. Anyway, so what are your thoughts on gold, Jim? You have, is it super high, or has it hit a new support level going higher? Any thoughts on that, on this one?
Yeah, so I'll give you an honest thought on gold. I had been since COVID ridiculously bullish on gold, and for years and I'll use some technical. It didn't do shit for years, and I was getting more and more frustrated about it. And about a year and a half ago, I gave up on it. It took off to 3,500. is what happened. So the moral of that story is it's the single hardest thing to understand in the world. I mean, because it seemed to me like the rally to 3,500 was COVID. We shut down the freaking economy, and we were counting up the number of dead people every day. And if there was ever a time that you were going to say, I got to have gold in my portfolio, that was it. And it didn't do anything until about a year and a half ago. And so that's really the thing about gold, I will say, is a bigger picture thing. It's really hard to understand this thing and really hard to make sure or make heads or tails of why it goes or where it doesn't go. Now that I said that, it has the uptrend. I'm not going to fight it. It's going to keep going. I understand the arguments that we're saying about it, store value and protection and all that other stuff. And I'm bullish on it for that reason. But I got to be honest with you, as far as giving you a more technical reason for it, I was all over it in 2020, and I wasn't doing anything with it except just sitting there aggravated because it wasn't going anywhere, and then gave up on it.
So, I'm outsized long gold for a couple of reasons. I started buying it during the financial crisis, the physical portion of it. One of the reasons I accelerated.
You mean 08? You mean 08?
Yeah, exactly. I started buying it in 07. Yeah. And but I've been very upfront about that. I've been accused of being a gold bug for many years. The reason I've accelerated those purchases over the last few years, in 2016, 64% of the world's reserves were held in the dollar and U.S. Treasuries. Things started happening. We started making less and less friends around the world. That started to move in the other direction. Now it's at 57%. Doesn't sound like much, but that's significant if all these countries are stockpiling gold. The thing with Russia did not help. And I'm talking about freezing them out of the SWIFT payment system, freezing all their dollar-denominated assets. That accelerated gold purchases around the world. So then I have to ask myself, is anything that's going on right now making all the countries that don't like us very much like us more? And the answer to that, I think, is a resounding no. The one thing that stands in the way of that is if Trump really can bully these countries who are talking about joining some sort of BRIC currency, if he can really bully them, that might unwind the trade. As a matter of fact, for the readers of The Unfiltered Investor, I know a lot of you people who are watching are, that one of my points over the weekend was that I put on a lot of gold hedges because I think it has run quite a bit, and it's kind of at a put up or shut up moment. And technically, we can go over that in a different show because I don't have my charts in front of me, but that's my thesis.
You've got the big gold collar on, don't you?
Oh, you should see, man. I got gold everywhere. Actually, I only got this. Bobby and I are two different kinds of Dagos, and I think Bianco goes more towards me. There are some Italians who like to gold everything and chains and shit. I never was that way, and I don't know why. Bianco, I don't think, is that way either, right?
I don't have a pinky ring, if you're asking me.
I actually, oddly enough, my father left me his pinky ring when he passed away. And I asked my wife the other day if I could start wearing it. She said, are you going to take this as an offense to your father if I say no? I'm like, of course not. She says, fuck no. Of course, she's a white girl, similar to Molly, and Lex is a white girl.
I'm going to agree with her, Bobby.
No, listen, the gold story to me, I bought my first gold coin in 1986. The initial minting of the gold eagle was 1986. I bought my first one because of what Jim just described me as, because I thought it's gold. How bad could it be, right? Worst case scenario, I can melt it into a Cuban link chain or bracelet and wear it on myself, right? And it struck me over the years, especially when you have economies the size of China and India that still value gold as jewelry. And there's a couple people in here. Agitator is one of them. Agitator put up in the comments that CBDC is what would kill the corruption in our government intelligence agencies. I think the opposite of that. I think it would encourage the corruption in our government intelligence agencies because they'd be the one controlling it.
Yep, absolutely.
You think there's anything out there that the government controls that we see clearly through? Gold is one of the anti-government things to me, is holding gold. And to what Jimmy Iuorio said, especially after what happened to the Canadian truck drivers, I started buying more gold then. And I don't think I will ever not own gold. The vast majority of the gold that we own, and it is a large number, is within reach of me sitting here right now.
What about your Smith & Wesson?
That I could show it to you. No, I cleaned it. It's a Kimber Micro 9 Eclipse, and I cleaned it yesterday, so I don't have it in here like I normally do. I've got that
One of
thing
my
on
early
the desk, the holster under the desk here, or I can just pull it out.
One of my
Gold
early
key-
mentors used to tell me that the best investment was a gold-plated handgun.
I love that.
That sounds very double
That's brilliant.
And listen, there's also some currency, or there's some crypto people in the comments right now, and I don't disagree with the whole Ethereum and is our way out and all of that. But part of why I hold so much gold is because I just can't imagine global governments allowing crypto to exist. And if you think they're not going to be the first ones with quantum computers to mess that shit up, I think you're wrong. So I look at it from that point of view, and I say to myself, what's the problem with crypto? Well, I don't believe crypto is a currency and an asset, right? I don't think it's both. I don't think it's a currency and a flight to safety asset. I think gold actually is. I think it's the only asset. And I know some people personally in the Palisades fires that lost everything except gold, which melted down but still existed in their bedroom. And they pulled it out, and when their ATM wasn't working, they took gold to a pawn shop they knew, and they received US dollars, and they were able to buy food. Now, I know that they would have been able to get their money because their money was held digitally, whatever. But if there's an EMP attack, good luck with your crypto. I'm just saying, for me, gold is still the thing that I think is completely impervious, even to fire and hurricane. And living in Southwest Florida, that's kind of a concern for me because we have both here.
So you're a fan of actually physically owning
Yes.
versus an ETF or some other way to have that.
I'm a fan of physically owning gold. I'm not against trading ETF. I own crypto as well, but I think holding physical gold is what allows me to sleep on a very hard, shiny gold pillow at night.
You want me to introduce you to my guard dogs? We'll see if
Yeah, I'm going to agree with Kaz here. And to clarify, Kaz, I'm saying the dollar doesn't have value because it's losing its scarcity. But I think, I do agree with some of the stuff that Michael Saylor, and I might probably upset some of you guys on this, but Michael Saylor saying that Bitcoin is the new digital gold. I think the problem when it comes to something like COVID and the world shuts down, what is its use? As long as it has value, as long as, you still have airspace and you have electronics use for it, but how are we going to use that on a day-to-day? And so yes, EMP for sure. But I think Bitcoin is one thing that stays sovereign. It's one thing that is easily transferable. It's cross-border. I mean, there's so many things that are really amazing about it. And it's 21 trillion. There is scarcity there. So I think there's a future there. I don't think it's gotten its start yet. I think, although people are catching on, I think it's about to take off because, like you're saying, Jimmy, they are stock holding, preparing for the CBDC. So
keep in mind that the European Central Bank is pushing full speed ahead for a CBDC. They actually want to be the leader in that.
I don't want CBDC. I want Bitcoin, which is decentralized. That's centralized. So I am
right.
And I think people get confused with that. I think they think CBDC, it must be crypto. It's the new future. It's gold back. But I think they don't understand that it's centralized. It's not.
I'll just really quickly repeat what I just said earlier. A CBDC is not a financial instrument. It is a surveillance tool. And once you understand it as that, then everything else. Yeah.
But I want to say this real quick. To me, as a believer, I'm not a gold bug. I'm really not. I own more stocks in terms of dollar value than I do gold. But I own a lot of gold, like into six figures. And the thing that people, as a holder of gold, I'm willing to admit the things that are wrong with gold. That's what I don't like about the crypto community.
Well, particularly Michael Saylor. When she mentioned Michael Saylor,
there is simply no fault, and I don't believe that.
His surety is so off-putting.
As it gains acceptance, there's going to be people that lose their crypto wallet. They drop it in the pool. They don't have a paper wallet. They didn't write their key down somewhere, and they don't know how to get their money, and that money's going to be gone. There's also going to be, as Molly, as you mentioned, there's going to be quantum computing theft. Not of everybody, because there are people that will be able to, hide their Bitcoin on their cold wallet, pull it out only when necessary. They won't get in that window. But their digital theft will be rampant, and it will pull people away from Bitcoin. I'm a believer that Bitcoin either goes to 0 or 1 million, and there's no other option. to me. But it
and
can go to zero. It going to zero is not a 0% like a lot of people in crypto think.
And nobody knows this, but I mean, nobody talks about this. I'm sure a lot of people do, but the 51% attack. So if someone owns more than 51%, you can change the rules of Bitcoin. So there's, and again, like you say, quantum computers can or put that cryptography into danger. So there are a couple things, and I'm sure quantum computers as well will help protect that. But I'd be interested to see what you guys think. Sarah Pink says quantum computing is a non-issue. So that'd be interesting to see.
Nobody ever says why.
But I think in 10 years, it might be.
Well, it won't be an equal issue. I mean, if you gave me a quantum computer and you told me,
protect it. And
if you gave me, just to keep the example simple, you give me a quantum computer and you say I can hack Bitcoin, I would say I ain't gonna waste my time with that rounding error. I'm hacking the Federal Reserve, and I'm taking all their money. I mean, the TradFi system is gone 6 ways to Sunday, well before we start getting into breaking cryptography. That it won't survive. It won't survive that in any way once you get some kind of quantum computing. Now, what'll probably happen is the quantum computers will also go to everybody else, and we'll find new security systems that can survive, quantum computers as well. So I don't think necessarily that's a big problem.
He says more like 50 years, he says, Agitator in the comments.
Right. And by the way, real quick, Molly, on your 51% attack, that is a problem. Of course, the fix to that is you have to run the price of the crypto up so much that to acquire 51% of it is such a big number, you could never make it back by changing first of all, you don't have enough money to acquire 51%. And I'm talking about like governments can't do it. If you run it into the
maybe BlackRock's Aladdin, maybe that AI that handles.
Is it still that like the vast majority of Bitcoin are owned by like a very small group? I don't know the exact data, but when you say that, they basically become the central bank.
That's if you get to
really good point, Bobby.
Right. When you get to 51%, you could put up an improvement proposal so you could change the structure of Bitcoin, and you need a 51% vote in order to change it in any way you want. And if you own 51%, you could change it any way you want. You don't need anybody else's vote. But if it's worth $30 trillion, you need $15 trillion to get 51%. And maybe even the US government doesn't have that kind of money to get 51% of it.
Amen.
Mal, Bob's got to go. He's got to go. So that means we got to go.
Jens and Bobby. All right.
I got to tell you, its stock chart on Twitter just put up a Joe Pesci trying on a pinky ring clip, which I think.
Okay, you got a point for me, Bobby.
By the way, everybody knows his name is Remo.
Oh, yeah.
He's probably wearing
a real one of us.
I love it. Guys, thanks for coming on. I appreciate you guys doing this. Jim Iuorio, Jim Bianco, Bob Iaccino.
Yeah, you got it.
I got it.
Bobby, just change your name.
I'm just changing. I'm Smith. Can you Smith with a vowel?
And of course, Molly, the girl wonder in Canada.
Thank you guys for having me.
Thanks, you guys.
That was great.
Thank you.
That was fun.
All right, guys. Talk soon.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.